highest, best use of capital is to buy Bitcoin and hold the Bitcoin. The Bitcoin is going to appreciate in value faster than the S&P index. It's going to appreciate in value faster than commercial real estate. And so there's no point in selling the winner to buy the losers. And Bitcoin is the winner.
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discusses Bitcoin and crypto. According to Michael Saylor, looking back at our history, we've experienced periods such as the crypto winter, where Bitcoin's value dropped significantly from 66,000 to 16,000. During such times, instead of selling our Bitcoin, we decided to hold onto it. This meant adjusting our leverage from 20% to 40% or even 60%. This strategy allowed us to navigate through the challenging market conditions. Our method of raising capital involves utilizing convertible debt, which is an unsecured instrument that is not subject to mark-to-market valuation. Debt does not mature for several years after issuance and is not secured against any other form of capital. Therefore, we simply wait for the market to rebound, as we did in 2022 and 2023, resulting in our shareholders benefiting from the reduction in debt as Bitcoin rallied in the opposite direction, and lots of things Michael Saylor discusses. So please watch the video to end, and share this video, and subscribe our channel, Everyday Finance. Thanks.
Yeah, well, we think Bitcoin is the highest form of property. It's the apex property in the world, and it's the best investment asset. So the end game is to acquire more Bitcoin. Whoever gets the most Bitcoin wins.
Well,
there is no other end game.
But Michael, I guess what I'm trying to understand is, so if I think of it as digital property, and I think of analogies, right? I think of a real estate company that buys property and holds on to other kinds of property. They may not be the apex, but whatever kinds of property. I think of an asset manager that buys all kinds of different assets. Eventually, they sell those assets in order to make profits. But I don't think that is your end game, right? You're not planning to sell the Bitcoin at any point. So kind of what is the purpose of it over time?
Well, let's keep in mind the fundamental principle. What's the use case of Bitcoin? It's capital preservation. So if you have $1 billion and you live in South America, or you live in Asia, or you live in Africa, and you want the capital to last for 100 years, you're not going to want to buy $1 billion company or $1 billion building or $1 billion of land in any place in Africa. You're going to have to find some other form of property that you can hold for a long period of time. Let's take New York City. Developers of New York City in 1776 didn't have an end game. They've been raising capital to invest in New York City real estate at the all-time high for 300 years. If you went and talked to them today and you said, what's your end game? They would say, well, we're going to keep investing in New York City. If you've ever talked to a person that owned an apartment in New York City, no one aspires to hold the apartment for a few years, sell the apartment, and move out of New York City. They put it in their will, they give it to their children, and if you ask them why, they say there's no better place on earth to live than New York. There is no place up from there. So New York City is the end game for people that want to live in the greatest city in North America. Bitcoin is the end game for anybody that wants to own the greatest property in the 21st century. The real estate developers in New York City, they're not buying the real estate because they want to live in it. They're buying the real estate because they expect
well, because they want to sell it eventually, desirable. Michael. I mean, let's be honest. Most of the people who are, yes, sure, some people pass it on to their children, but most of the people who are buying assets at some point want to sell the assets at a profit. So let
me say it a different way.
Okay.
People that use fiat currency as a store of value, there's a name for them. We call them poor. Okay. Anybody that's rich in the world, they own property. They own large swathes of land. The royal family of England, it didn't sell all of its property in central London in order to buy currency or paper money, nor did the royal family of Japan, nor did the royal family in the Middle East. In fact, they want to own the property forever. I want you to imagine Bitcoin it's a city in cyberspace that's 276 blocks wide, 276 blocks high, 276 blocks deep, about 21 million blocks. Now imagine all 8 billion people in the world want to live there one day. They want to put their capital there. There's $900 trillion of wealth in the world. As people migrate from every other form of property and they've assets into cyberspace, you're going to see the Bitcoin network go from $1 trillion network to a 10x that to 100x that. And there really is nowhere else to go. It is the apex property of the human race.
There is a real chance that exchange-traded funds for Ethereum could be launched in the United States by late in June. Analysts noted that BlackRock had made an important update to its filing, which was necessary for the launch on May 29th. BlackRock updated its forms, including one for its shares in the Ethereum Trust, with the Securities and Exchange Commission. This update came nearly a week after the regulator approved its 19 bits for filing. Both the filing and the approval are positive signs that the ETF will soon start trading. In a May 29th statement, Eric Bynes, an analyst at Bloomberg ETF, mentioned the possibility of another round of finding 2 NC comments. He also speculated that there could be a launch by the end of June, although he kept his approval odds for around July 4th. Bynes acknowledged that an earlier approval would be unlikely. According to analyst James Seyfarth from Bloomberg ETF, the updated S1 from BlackRock is a highly promising development. It indicates that both issuers and the SEC are actively collaborating to facilitate the launch of Ethereum ETFs. BlackRock's amended S1 provided details regarding its initial investment investor in capital. The organization responsible for providing funds to the investment firm has approved the allocation of money, allowing it to commence trading on May 21st. The investor affiliated with the BlackRock firm has agreed to purchase $10 million worth of shares on May 21st, 2024. On the same date, they received 400,000 shares at a price of $1.25 per share. The financial filing also mentioned that the ETF will be listed and traded under the ticker ETA. On the same day that HEX withdrew its bid for an Ethereum ETF, the SEC approved similar ETFs from BlackRock and 7 other issuers. A source familiar with the application confirmed that Hashed no longer plans to pursue a single-asset Ethereum ETF. Analysts believe that the ETF could drive ETH to new highs, as some see it as a way for Wall Street to bet on the growth of Web3. However, others speculate that ETH may face price pressure due to potential outflows from the grayscale Ethereum Trust, which is expected to convert and narrow its discount, resulting in $110 million of average daily outflows for several weeks. Let's get back to Michael Saylor interview.
Right now, an institutional investor that wants to buy Bitcoin has a choice of investing in the ETFs, of which BlackRock and Fidelity are very well known, or investing in some other company that has a Bitcoin strategy like MicroStrategy. You could think of the ETFs like ocean-going container ships. They can carry huge amounts of capital. You can invest $1 billion a day in the BlackRock ETF, so they could take on hundreds of billions of dollars of capital. They're not going to trade at a premium, but what they don't have is performance and leverage. MicroStrategy is different because our capital isn't, you can't redeem our shares, so it's possible for our shares to trade at a premium. We're an operating company, and that means when our shares trade at a premium, we can either raise capital through convertible debt or through equity. When we do that, we're doing it at a premium to the underlying assets. That captures an accretion for our underlying shareholders. So following a debt deal where we swap the debt for Bitcoin, our common stock shareholders have more Bitcoin per share than they did before the deal. So another way to say that is, if you want to pay 25 basis points and be 1-to-1 levered, then you would buy the ETF. But if you actually want to generate an accretion or a yield and not pay the fee and have leverage, then you would buy a stock like MicroStrategy. You could think of us as like, we're like air freight. We're Federal Express. We can take you faster but we're never going to carry the same amount of capital in our payload as a supertanker or a container ship. So there's place for both of those strategies. And in fact, they're very complementary. I think the ETFs benefit from the existence of companies like MicroStrategy, and MicroStrategy benefits from the existence of the ETFs. Well, you can see, if you look at our past, there have been periods during the crypto winter when Bitcoin went from 66,000 all the way down to 16,000. In that case, we simply hold the Bitcoin. Instead of being 20% levered, we become 40% or 60% levered. The way that we raise the capital is using convertible debt. And so the convertible debt is a unsecured instrument. It's not marked to market. It doesn't come due except in 4, 5, or 6 years from the point that we issued it. And it's not secured against any other kind of capital. So we don't have to actually do anything. We just wait for the market to recover. And that's what we did in 22. And in 23, we recovered, and our shareholders benefited from the deleveraging as Bitcoin rallied in the other direction.
Bitcoin has been stuck in a $10,000 price range for over 10 weeks, with new all-time highs proving to be elusive despite numerous attempts. Bitcoin's price has been fluctuating between $72,000 and $60,000, indicating a lack of clear direction. According to trader Don Crypt, BTC has been hovering near its previous cycle high for approximately 11 weeks. Looking back at historical data, it usually takes around 4 to 8 weeks of consolidation around cycle highs before any notable price shifts occur. According to Dan Crypto Trades, in previous cycles, it took Bitcoin, BTC, around 4 to 8 weeks to consolidate around its previous cycle highs. This consolidation period was followed by significant expansion. Historically, BTC has shown strong price gains of over 20% within a 90-day window during these timeframes, indicating an extended uptrend. However, in the last quarter, only 5 days have met this threshold, suggesting a more measured market. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance. And we will meet in next video. Thanks.